Another video. Sorry for actually being live a little later today, you guys. We definitely wanted to be live a little earlier, but as we all have our lives, we have some other stuff to take care of. So I'm here now. So looks like you guys, we're finally having some momentum. This week has been very slow in the markets. We haven't had a lot of big moves. We've had a couple 20 pip trades here, 15 pip trades here, but nothing really substantial. And I think it's just because between these times of the market is before the huge market reversals or huge market zone shifts happen in the market. I'm going to tell you guys a lot about that today, as well as some strategies and talk about the Aussie dollar and what's going on with the Australian dollar. So glad to be on today's live stream, you guys. Super excited, and we're going to go straight into it. So as I'm going to pull up the Australian dollar pair, and the reason why I'm doing the Australian dollar today, you guys, is because I saw some stuff in Forex Factory last night that I was looking into the news, and I was just like, man, this looks like a bunch of BS, like, bearish stop hunts, So when I saw that, I saw the mortgage rates obviously spiked from whatever it was like. I forgot exactly what the rates were. The mortgage spikes, tremendously for the Australian dollar, right? And we also had some other Australian monetary endeavors that obviously stimulated the economy or digressed the Australian dollar as well. So that being said, I thought it'd be really interesting to show you guys how fundamental data and technical data has an integration in how they are actually moving the markets into this. So we can obviously see that the monetary policy decisions, we can go over the ECB market decided to interest rates on main refinancing operations on interest rates on the marginal lending facility and deposits of facility will remain unchanged at flat rate, right? And so that being said, you guys, that I'm going to go over to some of the stories we went over yesterday's and stuff that I went over yesterday that I was like, that's very interesting. As we know that we have one of the biggest hedge funds managers by one of the biggest real estate investments or what I like to say, ego drive real estate deals was $250 million a couple days ago, and he's one of the biggest hedge fund managers on Wall Street. I've read some of his books, that his research on him. He's definitely a very well investor. Started off with $275,000 in Harvard, so he had some money to start with. Sounds like he comes from a well-off family, so good for him. So that being said, you guys, we're just going to go straight into it. I'm going to talk about the fundamental analysis. So if you guys don't know what Forex Factory is, you can look it up. Forex Factory covers over a lot of fundamental analysis. Shout out to Naeem one more time for showing me this. I used to use investment.com, which is a big one, but ever since I've seen Forex Factory, I mean, I'm hooked. I look at this every single day, like nonstop, just to always see what's going on in the markets. It's always good to be, understanding what's going on in the market. So what's up, fam? Hey, of course, man. Thank you so much for being on here, Coach 37. I really appreciate you guys showing the support and love. I also have our links available if you guys are looking to get into the program. The link is in the description, or it's in our tag. You guys can see there. It's Traders Profit Club /B there. But also you guys can just go to Snipers too as well and get the program itself. So we're almost finished. Actually, I just am running just a couple more things on a couple little pieces of the risk management package for the trading program. So that's going to be available very soon, you guys. I've been saying that for a little while, but as you know that I have clients, and also I manage a portfolio, and also am doing private client sessions as well. So I'm also trying to integrate this into the schedule. So sorry for taking a little more time to get that, but I want to make sure that you guys have the best information available. So going straight into it, I'm trying to pick that out first. Looks like it's already in the junk. So let me just go into our latest stream. So we go into hotlines and next to last, go to all breaks, go to latest, and go to apply settings. So looks like it's not happening. So everybody who doesn't know, we can go to investment.com as well. But if you guys didn't see that, there's a lot of Australian dollar or monetary things that came out of Australia for the last couple of days that came out negative. So we're going to just go back into this and show you guys what I'm talking about. So I can see we had Australian MI inflation expirations, but that's not really that big. Anything that's red here has a huge impact, right? So we're just going to go back into it a couple more days. And I'm actually going to show you guys where I was saying this previously. So we had obviously Australian dollar. We're going to look into it right here. So let's get to it. So it looks like it's not showing there. Give me one more second. Sorry, I wasn't well prepared today, you guys. That's a strike on me. So, okay, so unemployment change, right? So we had unemployment change, and we also had unemployment rate, right? So we had a huge increase, right? So this was basically this yesterday, right? So yesterday, so if you go to the Australian dollar charts, we can see AUD USD is finally having that spike, right? So we were seeing this bear trap, you guys. So what this essentially is that price is having this momentum to the downside. As you can see that if we go to, I like to use the 4-hour chart for this fundamentals because it just gives me a higher peak formation. So I'm going to show you guys exactly where prices, or not exactly because I'm not a guru, but what I've seen in price structure and what I've seen a lot of times is this, that we can see that price has definitely been showing this bear trap right here. Obviously, this is what all these pending orders were first established. So we're just going to put that there. So pending orders. So when these pending orders were hit, so our hits. So we can say, whoops, where? So pending orders hit, right? So pending orders were hit. This means that a lot of this, as you guys know, that these were trailing stop losses, or these were areas where a lot of people were trying to get into trades that were trying to short. So obviously a lot of these people got scooped into price and they got their entries filled, right? So entries filled, pending orders hit. So that being said, then they drove price to the upside, which then stopped a lot of these traders off, so right? So hit stop loss. And I'm not making this stuff up, you guys. I'm really serious. Like I said before, I worked with a proprietary trader, and he told me this legitimately opened my eyes to a whole different type of paradigm and concept of how the market really works. So this is just something that I learned from, shadowing someone that is a very successful proprietary investor in the early 2016. So I'll show you guys this. So pending orders are hit, then they obviously hit their stop losses here. So this is what happens. So as you can see that after this spike was hit, that's when a lot of fundamental data comes out, right? Because how is price going to evolve and retest and structure, and how are they going to have momentum that's going to increase the value of their price, that's going to give a lot of these institutional bankers a lot of momentum to drive price. As we know, 92% of the volume is traded by proprietary investment banks, right? So they're going to be driving the US dollar and the Australian dollar as of right now. So what do we take into consideration? We take in this fundamental data here to integrate with our system. We don't make this our only system, our only way to trade, because personally, I'm not just a fundamental trader. I use technical analysis mostly, but I take into fundamental data to integrate a system that that shows me where the momentum is going to go in the near future. So that being said, high impact news is right here, you guys, which is the red right here. So we're going to go down a little more. We can even see there has been so as we can see here, that this was the news that came out of yesterday, which is the most important thing right now, as of right now, that came out. So we can see that this was a huge increase, or not for the unemployment, but for employment change. That was a huge increase. So we're probably going to see this, you guys. So So as we can see, sorry about that, you guys. So as you can see, market price is moving to the upside. We can see the consolidation has moved from this area, which was a flag pattern, which we like to saw a consolidation, or a zone, which we like to also call a channel, right? A lot of people trade in these channels. You can look at YouTube. A lot of people use these channel formations. So as you can see here, market price was definitely showing this area of structure. Oh, my brothers. Right here, as you can see, channel formation was established. And then after this channel formation was established, we saw this breakdown to the downside as we have the hug on the 30 moving average, which then had that pending stop, which then we're going to see another pattern, right? As we can see, price is definitely making this channel once again of lower lows at this range. And then what you're going to see soon enough, especially coming into February, is we're going to see because as we know now, this is considered a peak formation low. So I'm going to show you guys some of my trading styles and how I know and what I'm able to formulate off this. So we can see a peak formation low. So this is a peak formation low. What does that mean? A peak formation low means this is the end of a trend, meaning this is the end of a downtrend, right? We're coming from essentially a downtrend, right? So what do? They put that spike to the downside to make that peak formation from this channel right here, completely driving price, right? And we talked about previous videos, the 4 phases of the market. We have the accumulation phase, the markup phase, the distribution phase, and the markdown phase, you guys, okay? So what is this establishing? What is this area? This is called the accumulation phase, right? They're accumulating price while having, right, increased fundamental attributes of the monetary policy, which is going to stimulate price, which is going to increase banking institutional driven momentum, and which is going to establish higher market price, right? So we're taking all this into consideration. So while we're seeing all these pending orders are hit, they're not going to go any lower or try to retest this area because all these pending orders are now in the market, right? These are either markets or they've already been hit, but a lot of these people's, stop losses or trailing stop losses could have been up here, right? So what are we going to see? We're going to use psychological levels. So what are we going to see for these areas? We're going to look at previous structure high. We're going to see where price has definitely been. As we can see there, that's a psychological level at 1081000, right? I didn't draw that perfectly, but if I were to put it down a little lower, right, we'll put that exactly at 108. 000. So that's a psychological level, right? So if you guys saw in the Discord, I showed you guys how the algorithm structure is a part of the market and how it plays. You can look at the Forex chart and I'll show you guys how that works. So that being said, you guys, market price made that hit to the low, right? So we have the hit to the low formation, which is that peak formation low. Then we also have RSI. RSI is showing very low and we're on a higher time frame. So what does that mean, you guys? It means higher time frame, more credibility. The higher the time frame, the more credible the indicators, all indicators are, right? Because it has higher momentum, higher time frames, higher momentum, higher flow. So we can now use this as an indicator to show that price is going to consolidate for some time, making that channel formation, and then it's going to have a spike to the high. Spike to the high, it's going to have that retest of that spike breakout, which is at this level, right? What do you guys know? It's at another psychological level, right? 107,500. Exactly. So we're going to have that spike to the low, retest that low, and then we're going to have a continuation of the uptrend. So that continuation of the uptrend is going to now be a market awareness. This market awareness is going to show a lot of huge formations, right? So this formations of this market will then, we're going to have a continuation to the upside, and this upside is going to move higher and higher and higher, okay? So now that we have this available, we're going to go into the market structures, show that market is going to move to the upside, and then we're going to have a continuation of this trend probably for the rest of the year, you guys. So if you're looking to get into a longer trend, we're probably going to see market go to the upside, and obviously it's not going to be, sunshines and rainbows. We're going to have drawback sessions where price is going to come down, make that swing low, and then move higher, right? So that's where we're going to be able to move and make the Fibonacci retracement, you guys, which is going to be at exactly that 23.6 or that 38.2, right? So what do we use when we do trading with the trend Fibonacci? We use the 38.2 and the 61.8. So I'm going to draw that out, you guys. And this is obviously a hypothesis, you guys, but just knowing how price moves for a very long time, we're going to definitely see some upside momentum for the Australian dollar. We're probably going to see that retest of this spike high, which was the beginning of June, which is that 6-month delay structure, which we're going to see market price hit this previous area. And then it's going to have a drawdown state, right, which is going to be that swing low because it has to have a higher high and a higher low. Consolidation and trend, right, 50-50. Market trends 50% of the time, market consolidates 50% of the time. So that's why we have the consolidation, the swing lows and swing highs. So as we're going to see here, price is then going to make that higher high. I'm just going to do higher high. I'm just going to do some symbols here, you guys. And they're going to have that higher low formation. So that higher low formation will then be established. from that higher high to that higher low. And then after we see this, we're going to have that retest, which is called a market anchor leg, okay? So what I mean by market anchor leg is essentially when price is going to come from a peak formation. So let me make sure that everybody's here and everybody's answering. If you guys have any questions, feel free to put in the Discord. Hopefully you guys are enjoying this. So a market anchor leg is essentially a when price comes back and retests the consolidation area before the breakout, which it doesn't break, right? So this is considered a market anchor leg, which then I draw a line. And I'll show you guys in previous structure how this works and so forth, okay? So market anchor leg is established usually around this area, or it could be a little bit higher than that previous structure, so it could be at this area too, right? So this is obviously a hypothesis, you guys, and obviously you can take a screenshot, see if this works. But as of right now, I mean, looks like a really drawn out price chart that I definitely am going, and I'm confident in. So as we can see, price is going to draw to the upside. We're going to see those swing lows and swing highs. It's not going to look this pretty, obviously. It's going to have some more whips and curls. But what I like to use at this area is if the Fibonacci retracement from a swing high to a swing low is still valid. So if we were to put from that swing high to swing low, gosh, you guys, look at how beautiful that is. You see how I mapped it out? And you see where this retracement level is right here? This is the 38.2, you guys. So this looks very credible, right? So this market analysis that I'm giving you guys right now looks like a very credible market analysis. This is obviously hypothesis, but if you guys look at previous structure with just the fundamental data coming out of the Australian dollar, it's going to look like it's going to have a bullish year this year. Looks like the US dollar is having a bearish year this year. So we're definitely going to take this into consideration that this is going to be a huge market trend. And this is obviously a market analysis, but right now this market analysis is looking very well because I drove from that swing low to that peak formation to the swing, from that swing high to the swing low. As we can see, price is definitely showing that retracement, right? At that 38.2, when price does hit this area, we're looking at this area, hit this area around May of 2019, so the next couple months. But as of right now, we're definitely looking for a bullish trend for the Australian dollar. We're looking to take longs on the Australian dollar, and this should give us some more validations for some nice bullish trends for the Australian dollar as of right now. So that being said, you guys, I hope you guys are enjoying this market analysis. You can say yes or an I on the comments if so, and I'm just going to keep on moving forward, you guys, and showing you guys, and I'm going to show you guys exactly how I'm able to come up with these market analysis and how I'm able to come up with a lot of these trades and positions that I'm able to make this analysis. So just to reiterate what I said previously, we're looking at that market peak formation. We're going to see the spike to the high to retest this levels, which then we're going to have that retrace to that, make that higher low from that higher high, and we're going to use that Fibonacci retracement to hit that 38.2, which is one of our trading methods on how we do able to find the lows to be able to buy to keep on continuous trend. So this is going to be some huge trades to be taking, you guys, for the Australian dollar. I'm going to put this in the Discord as well. I'm actually going to screenshot this and keep this available for you guys, so you'll have this for our next position, okay? So moving into structure, guys, I'm going to show you some of my market analysis and some of my trading strategies that I was able to screenshot and have in my backtesting portfolio. So what I use, you guys, is that I have a backtesting portfolio. So this backtesting portfolio is where I do all my backtesting for all my work, right? I've done it for about 3.5 years of this backtesting portfolio where I've been able to trade and see what positions are best to take and whatnot. So as you can see here, we use this thing called an M formation, right? So this M formation is establishment is when we use to reverse off a high to a low. We can use that from a swing high to a swing low. And as we can see, a W formation is what we use to go from a swing low to a swing high. So it's reversal tactic that I use in trading, right? So to answer your guys' questions on previous structure, we use stop punts. We see market anchor leg with a stop punt. So I want to show you guys this just to show you guys what I mean by how price is showing, right? So this is previous structure, and I want to show you guys exactly what I mean by this. So market formations are based on these structures, what we call retracements, right? So this is a perfect example, you guys, of me taking a position or a trade with the strategy that I teach you guys. So as we can see that I took this Great Britain pound, I had 3 trades open on this position, and then as you guys can see, this was the the outcome of this, where then we got closed into our positions. And this is our trading setups, right? We take W and M formations at peak highs and lows, head and shoulder formations, inverse head and shoulders, moving average bounces on trend only, Fibonacci sequence 61.8 for stop hunts, and then micro anchor leg to start a new trend, okay? So that being said, micro anchor leg to start a new trend. So what are we showing right here, you guys? We can see that this market anchor leg is another formation to start a new trend. So this is just a little back testing stuff that I use in a lot of this. Hey Zane, good to see you, brother. Good afternoon to you as well. So that is my analysis, you guys, for Australian dollar. Hopefully you guys are able to get some of this. I'll put this in the Discord as well. And I want to show you guys something awesome as well that I was able to do in my back testing analysis, which is something that I like to call the 1,000 pip range intervals. Okay, so between the major whole numbers, our major small numbers are accumulated in quarter points, right? These quarter points are usually in 250 pip intervals. So if you guys see me doing a lot of these trades now, I like to do with these swing trades. My swing trades are strategized on 250 pip intervals, okay? So as we can see that this long position was between 13750 to 14000, which is 250 pip intervals, right? So 1,000 pips altogether, but 250 pips in between. So if we were to look at a market update, right? So if we look at price here, we can see I mapped out those 250 pip intervals from here to here, and then here to here, and here to here. We can see that market price moves in between this area. So I'm gonna show you guys how exactly this works on a market price as of right now, okay? So I'm gonna go to a 1 hour time frame and show you guys exactly what this is. So I'm gonna first take if you guys wanna take this screenshot, I wanna be able to actually have this available. So I'm going to copy this and I'm going to keep that for you guys. I'm going to put that into the Discord. This is going to be the market analysis that I believe where price is going to be going for the next couple of months for the Australian dollar. And hopefully you guys understand how I'm coming up with all these methods and structures and supports and levels and resistance and areas and zones, because I did a lot of back testing and I have not mastered, but I've understood how market structure works. And I understand how market structure is going the way it does, okay? So that being said, moving forward, I'm going to show you guys how the market intervals work. So I'm going to go to the 1 hour chart, and I'm going to first erase a lot of this information. I'm going to put that in Discord. I've already copied that, so I'm going to paste it in Discord for you guys. So I'm going to show you guys exactly what these first I'm going to map out 1,000 pip intervals, and then I'm going to show you exactly what I mean by this, okay? So as of right here, we can already use that this is, so actually, let's go to a higher time frame because that will give us more validation and it will give us more range and more support. So let's go to the daily chart, and I'm going to map out this systematic formulation that I was able to come up with through backtesting, okay? So let's go for 1,000 pips, okay? So 1,000 pips is essentially where this run was established from high to low. So as you guys can see that was already a validation of what I'm talking about. So we can see from this swing high to this swing low, essentially, right, without this market trap, because this is the market stop hunt, basically inducing a lot of sellers, right, trapping a lot of liquidity to the downside. So we're not going to count this as a part of that. So this is just a liquidity trap. So we're not going to take this into consideration. Oops. So market trap, liquidity trap, right? So this is just basically liquidity trap. So this is 1,000 pip range, right? So if we look at previous structure, this was 1,000 pips between, 1,000 pips have been going since basically we've been in 1,000 pip range since December of 2016, right? How price literally moved 1,000 pips up, right, from swing low, right, of 2016, and then it went 1,000 pips up, and then it moved 1,000 pips down, right? So this is just giving me validation that this 1,000 pip interval, right, this 1,000 pip segment that I was telling you guys is how prices literally works, right? Use these quarter points can define your entry and exits when trading the market Wait for the market to reach these quarter sections before setting up a trade. Use with other indicators such as reversal patterns, support and resistance, and moving averages, which is this formulation here, you guys. So I'm not making this stuff up, you guys. I'm literally just showing you guys what I've been able to formulate over a lot of years of backtesting and trading and working on defining my craft, right? So that being said, we're going to be able to extend this channel formation here, and I'm showing you guys for this channel formation as of right now, from this swing low to this swing high, to this swing low to this swing high, and we can see that that is a channel period, right? Or we can put the channel here if people are saying, oh, man, that's not a channel, this is a channel, right? So that's a channel, right? And then now we have another channel, which is a little smaller. It's more of a really fast bearish market. Okay, so what are we going to see? We're priced now. Okay, so now we see that was 1,000 pips. So what are you probably going to see now? It's 1,000 pips once again to the upside. Okay, so it's going to break this previous support level, which is now going to be considered a bullish trend after it breaks this angular support, right? And we're going to use this 200 EMA, right, to scoop up price, and then market price is going to considerably be an upside momentum, right? Right, we talked about previously, this is called the accumulation area, where price is accumulation, and what we're going to start to see is the mark up phase, right? Just like we saw here, accumulation, mark up phase, market distribution phase, market down phase. Same thing again, you guys. Accumulation phase, mark up phase, market distribution phase, market down phase, right? And it could probably hit that 15, and then it's going to hit to the highs, okay? So that's why we made that analysis previously, where I showed you guys that it's probably going to retest this level as a 38.2 retracement to break higher to continue with an upwards trend. Okay, so hopefully you guys are getting a lot out of this, because it's a lot of information. I know it's a lot of information because I can tell. But I hope this is a lot of information. I hope you guys are starting to understand how that you don't need a bunch of crazy algorithms and market structure and stuff like that to just know where basic structure and price is going. You can just use the formulations that we're going to have at Traders Profit Club through the program I'm making for you guys. You'll be able to know how to do all this stuff yourself, I bet you, in no less than a month. And a lot of people, you guys can go through my last videos. I go through little segments like this over and over and over again, and it validates my credibility when I'm talking about a lot of these trades, okay? So moving forward, you guys, that's where we talked about the liquidity trap. We're going to definitely see a mark up phase out of this accumulation phase. Then we're going to see that drawdown stage, right, which we like to see as a second level, which we'll talk to you guys in future videos about. A second level, which will be that retracement area. And then that's where we're going to have a mass buy, okay? This is where you make a lot of money, okay? So in previous trades, you guys, the trades that I made $10,000 or $15,000, $16,000, I use by doing huge leverage trades on obviously a higher account, but having a very mapped out plan, right? So a lot of the time, you guys, it's not about luck, it's about having a mapped out plan, a plan that you've literally been able to dissect and know and been using for years. After a time, you start to build out this credibility in your mind, the subconscious mind, right? And then this credibility starts to adapt, and then you start to formulate with these same validation points, and these validation points start to let go of the fear, right? Because fear is essentially driven by ignorance, okay? So when you're ignorant, you have fear. That's what racism is. That's where a lot of these things are, right? Ignorance is bliss, as Americans say, but essentially it's not. Ignorance drives fear. Don't have ignorance. Be educated. Education brings prosperity. It brings peace of mind, okay? So when we have this validation, where we have credibility now, this credibility is giving us a huge factor of how market's going to work now, okay, you guys? So now that we have that validation, now we have that credibility, we're able to take higher leverage trades, obviously use with your own risk management. We'll go over risk management in future videos, and that will also be a part of the Traders Profit Club program. But what I want to say is that if you have a lot of confidence, you can scale into trades, you can take higher lot sizes, because you're now in that momentum stage, right? Compound interest, momentum, electromagnetic frequencies that are now driving your connections, right? Your neural connections. You're starting to make better trades. You're starting to live a better lifestyle. You're starting to do better things, right? It's all integrated together, right? So this is why I use these fundamental structures, these elements to now situate how price is going. So how do you know it will break to the upside after this long tunnel? Essentially, you never really know, but you can just tell, right? So how can you tell? Because of essentially things as market proprietary investors. See, the reason I know is because proprietary investors own and manage 92% of all volume in the Forex market. So they're only going to go a direction where they're going to make profit at, because they have a lot of clients to fulfill. They have a lot of funding and a lot of percentages they have to fulfill, right? They have books to fulfill because the market is based on an algorithm, right? That's why I put in the Discord that algorithm setup. So that being said, they're not going to go into a direction forever. They can't, because eventually people are going to catch on to that, and too much people are going to make money in the market, and then the banks and the institutions will then be out of business and people will lose their jobs. That being said, they have to move price a certain area for a certain while, but it has to be credible to where it's showing price is validating where a lot of traders are being closed, their stop losses are being hit, or where their stop loss or their pending orders are being entered. Via or saying that this is where their pending orders are being entered, which is here. That's why that had that what, and we're even talking about 250 interval spikes. I bet you anything that this, before I even measure it, I didn't measure it before this, it's going to be 250 pips. So let's measure this, and what do you know, you guys? Oops, let me actually erase this drawings and show you guys. So we talked about these intervals, right? These 250 pip intervals, right? I'm not making this stuff up, guys. I'm literally showing you guys what I've been able to backtest and do in my trading style forever, okay? So we're going to look at just this area in general, right? This area in general is just spike to the low, right? I'm going to show you guys literally that this stuff is exactly works, okay? Look at how many pips this spike was, okay? This spike, you guys, was 250 pips. 258 pips to be exact. But I'm not making this stuff up, you guys. This is literally how the market algorithm works, okay? 250 pips spike to the downside. We just talked about this. 250 pip intervals. That being said, that's how I know price is not going to go any lower, because the algorithm market is set. That is the peak formation low. That's why I made a system where it talks about peak formations as the end of a trend. So we're looking to go long at this position, right? So that's how I'm able to understand how price is going to make and how price moves based off these algorithm setup points that work over and over and over and over and over again, okay? So moving forward, that's why I know that this is essentially going to be the end of a downtrend. So that's why I made that available. I'm going to post that available for you guys in the Discord. So if you guys have any questions at this time, please feel free. I'm going to wrap this up soon enough. Hope you guys got a lot of information on today's live stream. I hope you guys got a lot of information on how markets work, how these structures work, how these market supports work. So do you consider that a capitalization? Yes. Yes. Very smart. Yes, I do consider that a capitalization as well, because they're pending orders, right? They're either stopping out a lot of traders that are essentially long, right? That got into this long position as they saw the market was making that peak formation. So everybody's like, oh, I'm gonna buy. And then boom, they shoot all the way down, hitting all their stop losses, capitalization, and pending orders. Essentially, it's all capitalization, right? Because if you have a pending order that's going against the position you're going, they are making capitalization on you. And if you had a trade going against this trend, you're obviously in capitalization. So yes, very smart. Yes, that is both in capitalization aspects, right? So those are both in the capitalizations, and they're both making liquidity, making money in the markets, okay? So 250 pip intervals, you guys. I'm not making this stuff up. As you guys just seen, that this spike was 250 pip interval. So now you guys know that we're going to be going long. We're going to be having that copy on the Discord for you guys. And we're going to be looking to go long for the Australian dollar as of right now. Australian dollar is looking strong right now. The fundamental data, we take that into consideration, but right? Women lie, men lie, but numbers don't, you guys. Numbers really don't lie, right? They can be manipulated, but they don't really lie. They're just really being manipulated, right? So essentially, we're just taking this data, right, into consideration. It's not going to be my valid like execution on making trades. This is just a validation segment on, I know, okay, unemployment change. And it's good to know this stuff, you guys, if you guys are looking to get into finance and looking to understand and manage portfolios and so forth. It's good to understand all this stuff as well, because you become well-rounded and you know a lot more, you know, than the average person about finance in general and monetary policies that can be able to, you know, give you become more of a credible investor, right? And so forth. So that being said, you guys, that it makes a lot of, so man, I have a lot to study. Good info. Thanks. Hey, of course, thanks for coming on, you guys. I really appreciate it. I really appreciate you guys being on today. I'm going to wrap this up because I have a meeting to go to after this live stream. But if you guys have any comments, I'm going to put after this live stream, as of right now, I'm going to put that that market structure, that market analysis for the Australian dollar, and I'm going to update it as I go along, so you guys will have that available. I don't have any trading signals up right now, just because it's been a very slow market. I'm not gonna rush any trades. We just saw Bitcoin spike. Well, not really even spike. We're on if we go to the 15-minute chart, then basically it's showing a little bit of upside momentum, but it's still at an angular area, right? So I had that long position. So hopefully we're going to see some inside out action, which inside out action means that it shows that it's making a trend right here. So obviously it can break to the downside, but if we see some inside out action, which means that we're going to see a downward hit, and then we're going to see upward it, downward it, upward it, then we're going to have more validation to the upside, right? So that's what it's called an inward outward structure. Then that will give time for the MACD to formulate price and move higher. So a lot of information, you guys. I know I'm not going to go too crazy. I don't want this to be like, you know, a calculus class where I'm just, you know, regurgitating all this information. And it's like, okay, what the heck is he talking about? So like, I'm going to just leave it as is right now, you guys. If you guys have any questions, and Japanese yen. So I'm going to have that available later on today. Thank you guys so much for being on today's channel, and smash that like button. And I will see you guys tomorrow. And happy Thursday. And we'll have some more information tomorrow. Have a great day, you guys. Talk to you soon. Do you have, oh, so Zane asked, I'll answer this question. Zane, thanks, Brenton. Do you have an app that utilizes Forex trading? That way I could start utilizing some signals if I'm at work. Yes, MT4, MetaTrader 4 is the app I use, you guys. I have it on my phone, have it on my computer. And we're also going to be able to integrate a algorithm or a signal indicator that I also use sparingly. But I'm going to actually have to get the license from someone who actually made it before I'm able to give that to you guys, because we have to do things right. So that being said, give that some time. But yes, to answer your question, Zane, yes, use MT4, MT5. Both of them are very good apps. You can use it on them. I don't really recommend trading on your phone. You can take our signals, because obviously I'm taking trades on a computer, and I'm never like giving you guys signals off my phone. I never do that. I always am on a computer before I give a signal. But you know, you can be able to take those signals on a phone. Just make sure you're aware of stop losses, trailing stops, and so forth. And we can go over that in future videos if you guys are not aware of trailing stops and stuff and so forth. So hopefully you guys had a lot of information on this video. I will see you guys tomorrow, and have a great Thursday. Goodbye now.